Hello traders! In today's session, I'm going to be giving you guys an overview of our weekly predictions that we made last week and showcase the final outcome. The purpose of this is to highlight the transparency between me and my members and also give you guys an opportunity to learn how our option trading model works. This option trading model has helped many traders become successful with their overall trading journey because it is designed to give you an idea where the estimated weekly top is, where the estimated weekly bottom is, as well as identify key inflection points and find the chop zones, bullish breakout zones, and bearish breakdown zones. This information can be used for many different factors. It can be used for option traders that are writing and selling premiums. It can be used for option traders that are buying, calls or puts, and it can be definitely used for equity traders that are looking to find the best spot to buy equity at our estimated weekly low or make adjustments to their portfolio by selling at the estimated weekly highs. So this model has been proven. I've been showing it time and time again, screaming on top of the mountain that its level of accuracy. This week, what you will find is a week called the direct for the penny bottom on S&P 500, and I'm going to be sharing with you guys how I use these numbers to come up with a trading strategy, to play different plays, and how I know the market is bullish or bearish. So let's go over each line by line on everything that I've spoken about this week. And we're going to showcase to you guys that this stuff is timestamped and it's there. You can't make any adjustments whatsoever. And it's 100% accurate. Okay. So this model, although it's an estimate, in some cases for certain stocks may not be 100% perfect, but for the majority of the part, it works. And we see it there because the market is very dynamic. Sometimes you may get unexpected news that may change the overall sentiment, and that's what definitely can change things. So we'll start off with the S&P 500. You guys will see that everything is timestamped. We gave this on the 8th, the day before the start of the week. It's all there. And you can see that our estimated weekly low was at 60.30 over here. Okay, so that was exactly where it was. This blue line is the start of the week here. And what we did over here is that we noticed that when the S&P 500 started to hit these bearish inflection points starting for early on, you see a bounce at level 2, a retest at level 1, 67, then it started to break down. At this point, we knew that, playing puts is where the money's at. During the early on in the week, and we tested that 60.50. It popped. This was a perfect opportunity where we got puts, and once it broke down, we gave a 200% plus play at the 60.50 zone near the end of the day on Tuesday, and members banked. And the reason for that is because we knew that in this bearish breakdown range, you'll see that drop here. This was the day before the CPI report, so when the CPI report came out, we loaded calls and that went to 500%. We sold at around 200% to take those profits. So as you guys can see here, we talked about the Broadcom earnings. I was coming out, the CPI was going to be the biggest thing. And pretty much what we noticed here at this point, we took some shorts. Okay, so we took Friday puts and those puts went up more than 100% for the team. I didn't sell because I wanted to see a retest at 60.30. My goals are pretty much reached for my week, month, and year. But my goal is that every trade that I give must give minimum 50% return in order for me to classify as it a trade that worked. Okay. But regardless, risk tolerance near end of the year, very high because I'm surpassed all my goals. So I'm taking a lot of shots with profits. You may not be there, but I'm going to help you get there. Okay. So let's get into the next details as well. So SPY analysis pretty much mimics SPX here. It was pretty much 602 was our estimated weekly bottom. That was a conversion done on our SPX chart. But as you guys can see, no edits whatsoever, matches the chart that you guys see over here. Let's go to QQQ. So QQQ, each level that I provide has a meaning to it. Okay, so the level 1 bullish or bearish represents a gatekeeping level. So this is where basically you will find your chop zones between level 1 and level 1 bullish and bearish. And you can use this area to buy calls if you want to. Sometimes a lot of scalpers use this level to, let's just say if it hits level 1 bearish, they use it to buy calls, make a quick return. And then once you see this level retesting and happening more frequently, you know that it's gonna likely to break here. Okay, so you guys can see right over here that our level 2 bearish right over here, and level 2 represents the basically downside trend here. Okay, the downside trade is null when there's news that comes out. Okay, so in this market that you see in here today, what you have noticed that we hit our level 2 bearish right when the CPI report came out. CPI report pretty much came in average, didn't show higher inflation, and tech started to really rebound off that, hitting this level 1, rejected, and then popping. Once we got the Broadcom news, it opened at level 2, confirming that the trend has now changed to that side. I didn't trade QQQ, but you can pretty much see that the numbers are perfectly aligned, where the major supports and resistances, where you see the biggest inflection point happens exactly at my numbers that you guys see over there. So that was very interesting to see. You can see that graph right over here. Okay, and you see that it's often choppy here. You see that the bearish breakdown, it drops real fast there, and then when the bullish breakout happens, like over here, it popped to our level 2 and then just pretty much cascaded lower here. Okay, now IWM, I just do this as a favor for a lot of people that do like to play IWM. This one here, pretty much, it did break down under our estimated weekly low. We were off by a point or so on this from our estimated weekly low. So that definitely looked very interesting, how it broke down through all these levels and just completely stopped close to our level 3. So it's not 100% perfect, but you can see pretty much approximately that this estimate is pretty good to give you an idea. This was a chart initially, and you can see that right over there. Okay, so we mentioned that as well, and we talked about potential IPOs. Now Tesla here, so this stock is pretty much, I would say, the hardest one to predict, because Tesla is a news based and it's often squeezed, right? So what you'll see here are estimated weekly highs at 420. Okay, now 420, it did pretty much stop there for a little bit, but then when it got through, it started to really break out, and our level 3 bullish was at 432. It ended up closing at around 436. So pretty much the funny thing about Tesla is last week I had a top at around, I think, 380, and it pretty much was perfect, spot on, and then in the last few minutes it ripped 10 points above my estimated weekly high. So what I find here is that Tesla hits my numbers spot on. Like you can see right over here, this right here rejected at level 3, but then usually on a Friday there's some massive whales that just take this up a notch, right? So there was no real news on Tesla this week, but pretty much you can see, I would say that this is a B plus chart. It went a little bit over, but you can pretty much see where the breakout zones are when Tesla is strong. So interesting to kind of see that. Okay, now another stock that we got spot on is NVDA here. Okay, so NVIDIA pretty much started off with weakness. You can see that how it hit the level 1. We bought calls here, and those calls went up 50% at this point when we got that little support, and we bounced off there, and pretty much it rejected this 200-day when it hit that. Okay, so estimated weekly high was 160, estimated weekly low was 132. Okay, so pretty much it retested the level 1. That's when you knew, okay, time to get some puts, because this was the first attempt. Second attempt, breakdown, boom, hit our level 2 bearish at 134, and it bounced off that to the penny, back up again. The downside trend was confirmed, so you knew that, okay, once you get a little bit of a pop, you don't want to pay the high of the day premiums. So what you do is that you wait for the pop to happen. You can use this level as a key support to buy calls, but if you do buy calls, it's a temporary play. Do not hold it too long. It's more of a scalp play. You play that bounce, take your profits, and then wait for the right maneuver to get into the puts. And when you look to get into the puts, what you want to do is you want to look at your premium chain. And let's just say if you want to look at the 132 puts on NVIDIA again, for example, you look at the option premium chart, you look in the past performance, see are you near the estimated weekly lows on those premiums, and then you can try to get in, and then because you got an optimal entry point as per the model, the downside trend is confirmed. So that's why you know that the puts were going to be a massive winner if you decide to get those. Now let's look back at our chart and figure out the next analysis here. One thing about NVIDIA you want to be aware of, they have a the CEO speaking on January 7th. We have details regarding that. Okay, so you can see no edits, replicates the before, and now you guys see the after here. Okay, so AMD basically, it had bad news the prior week. With the Amazon Web Service saying that their chips are not in demand, and they pretty much see that, right? So that was one thing, but another thing was bad is that more analysts are giving downgrades to the stock here. Okay, so what happened here is that AMD fell short of my estimated weekly low, broke lower. It did bounce off my estimated weekly low a little bit. This thing was straight down trending, bounced here, bounced to 131, and then broke my estimated weekly low and pretty much was off. Okay, so didn't call the stock right on the money here because the estimated weekly low went to 124. But with all these analyst downgrades and already pessimism on the stock, this really looked pretty bearish regardless. Okay, and you can see that right over here. So not a perfect chart on that, but pretty much wanted to be transparent about that. Okay, because not everything is perfect. You're always going to get some news. This is purely based on gamma levels and probabilities. So ASML pretty much hit no inflection point, was in our chop range. So we didn't really trade this, but we still had the information available there. Okay, so the premiums were moving as well. Now another thing is, we often do analysis on stocks that are pretty much, this Broadcom had earnings this week, but it's very hard to predict the top or the bottom on earnings. I find that 60 to 70% of the time I usually get it spot on. But in the case of Broadcom, they pretty much had, in my opinion, no surprising revenue growth or EPS. But what really took it up is the CEO guided by 20 to 30 billion. Something that's unpredictable, right? We did mention that Broadcom had signed a 3-year extended agreement with Apple, which was a case for that. We called out the 195 calls. I actually decided to sell those a little bit earlier before earnings because I didn't want to take that risk. But some members did hold those, and they made a lot of money off that. We actually called a Friday lotto play on Broadcom that went up over 120%. We got the 250 weekly calls. I didn't sell them because, of course, my high risk tolerance, but they went up 120%. I gave it on live on Twitter for free. And, the crazy thing is a lot of people made money off that, and they joined our membership because, we give these plays continuously. As long as the play is something that you have an opportunity to get into and something that goes above 50%, then I'm going to be fair. There's sometimes the circumstances where I tend to find plays that move so fast that, when I get in, and a lot of the time I do pre-announce my plays where I say I put an order to buy this or buy that. But sometimes there's those odd cases where the stock just flies if we pinpointed the perfect opportunity. I always tell my members, just wait for the re-entry price. It will always come back. Okay, so I always make sure fair with my members. We're never that type of service that if you miss the entry point because it was never given to you, because these options, especially on a Friday and a zero OTD move so fast, I never say, hey, this is considered a good trade because I made it, right? I might be faster than you, but at the end of the day, I always make sure it's fair. Okay, so Microsoft over here, pretty much it was all about the news that was happening with their crypto. We played the up and the down here, but we didn't hold it too long. We had the 450 calls going into the event. We sold it around 147, I believe, on this inflection point. It was pretty much choppy in our neutral range all week, and it was kind of getting aggravating holding this, waiting for the news. But what we've seen here is that Microsoft was slightly broke through our level 3 bullish share by a little bit. It went by 456, so we're off by around 2 points on the level 3. So level 3 is usually my reversal zone. where you will see a lot of resistance, likelihood of a top or a bottom. And my estimated weekly high is all the way up there. So difference between estimated weekly high and the level 3 is the level 3 is based on the option premium analysis. Basically, you know, how far are the premiums priced to go, and my estimated weekly high is basically based on the gamma levels, right? So that's how we differentiate both of them. Pretty much was close to that off by a few points, but you know, it closed right at my level 1 bearish. It often rejects my level 2 and level 3. You know, pretty much it didn't hold that level for too long, and then it just started to drop there. Okay, so not a bad analysis on that case. Okay, now Meta, this was definitely fun. Early on, you see it broke below my level 1 bearish. I was kind of seeing if there's weakness here. Popped up a little. This is my chop range, as you guys can see. Bounced right over here. So this would have been a great opportunity to get calls on that Tuesday before the market closed. Hit my level 1 bullish and rejected. You can see multiple attempts, didn't get through, and then just started to dump here. Okay, so that was a chart that right over here. You can see another case of our levels being really spot on. Okay, another thing here is Amazon pretty much stopped at my level 1 bullish, right? So we played calls on this. The trade went up 80% for our members. We took our profits at 80%, right at level 1 bullish, because I noticed that when it hits this number here, and I noticed that closer to the money premiums are losing value, that's my cue to get out. And that was a perfect idea, because that day, that's when the stock started to really dump. And I hit this level 1 bearish support, bounced back to the 230. So pretty much trading in that level 1 and level 1 bullish and bearish. Okay, SMCI. So we call this stock right on the money here. Okay, so prior to the week, we swung SMCI 45 puts, assuming that this would be removed off the S&P 500. Didn't happen, and they got an extension for their delisting, which, you know, the extension for their reporting, sorry, which drove the stock 8%. But the funny thing is, the stock still traded, right? So you can see right here, major drop here, and you know, our level 3 bearish was right on the money here. Okay, new development came on Friday. They actually got removed from the NASDAQ 100, okay, which we did discuss. Unfortunately, I was considering to get puts, but I just thought, okay, does it really make sense taking puts when the NASDAQ was actually the one that gave them the extension in the first place? Would they give them a second chance of not delisting them? So even the CEO came out saying that he's confident that they wouldn't be delisted. So I should have taken that as a cue to pretty much go. But starting next week, you can pretty much see that this stock is likely to go maybe 28 bucks, maybe even lower. Okay, so we call this bottom right on the money here. All the inflection points hit. We played this SMCI 2 times on the downside, and we made some good coin. Okay, so PLTR, another bottom that we caught out as well on level 3 bearish. We gave calls to the free Discord and to my members at here. I didn't take that play. I had calls earlier, but we called this bottom here, and this stock ripped. We called it 70 calls, which went up more than 300% at this bottom here. So this was a great opportunity to buy the stock or play the options. It also got added to the NASDAQ 100, which was announced on Friday at 8 p.m. Eastern time, and this thing really ripped here. Okay, so you can see no edits here whatsoever. This was the details, so we'll definitely be analyzing this stock upcoming for this week as well. Coinbase is one that pretty much was trading within our inflection points, didn't hit our bottom, but pretty much it broke below our estimated weekly low here, and it kind of had a hard time getting above level 2 bearish. Okay, so by this analysis here, you pretty much would know that it's pretty weak. It initially bounced off my estimated weekly low, then it broke down, right? So this one here definitely weak, and I didn't really play it at all, but you can see the levels are corresponding there. Micron strategy. Okay, so fun play here. This got added to the NASDAQ 100 on Friday, and guess what? We got calls for it, right? So this right here bounced exactly off my 355 level 1 bearish, right to the money, as you guys can see, and start to really pop. But it traded in a chop range throughout the day. I told my team, hey, the premiums are nuts, let it cool down, wait for the Friday, and that's when you get the calls. So golden cross setup here. This thing could possibly open at around 472. It could explode to 500 next week. It even could go to $600 to $700, guys. Believe it or not, this stock can really run, especially when it got news like that. And if Bitcoin really gets above 105, this thing will go nuts. Okay, so we have equity on this. We have calls on this where, you know, this thing's gonna squeeze, and we're all anticipating this massive run up on the stock here. Okay, so Snowflake over here pretty much broke below our estimated weekly low at around 168. So it broke below 172 and then broke our extension at 168 temporarily. It did you know, hit our numbers quite a bit of times, bounced there, dumped there, and pretty much was there. So it was off around 3 points from our estimated weekly low. So you know, slight margin of error. We mentioned that the RSI was hot on this. I usually don't look at the RSI, but I give that technical analysis as part of my you know, due diligence on every trade that we're looking at. It did look overbought, and it looks like they were selling a lot of IV there. Okay, but I didn't trade Snow this week, but this information is always available for my members. Okay, now AppLovin. So we had calls prior to this expecting that this would be on the S&P 500, but that was with a roll of profits the prior week because we banked massive on the calls on this, over 200%, and then we rolled partial profit. So didn't really care if it went to zero because at the end of the day, AppLovin still made us money. Now, the thing here is that when it didn't get added to the S&P 500, we bought puts right off the bat and then banked off that. Okay, so this here broke below our estimated weekly low. Kind of the estimated weekly low started to become a resistance here, and it just traded, you know, pretty much at this point. We also gave calls, right? And it ripped to our 360. So at this point over here, we gave the calls off the 200-day moving average bounce, and that was 100% play. So we gave two proper plays on AppLovin, both to the downside and to the upside. The downside we made around, I think, around 80 to 50%, but the upside we called 100% winner on that, and you guys can see pretty much that's where it is. Okay, Eli Lilly here. So this one here broke below our estimated weekly low. Initially it bounced, but you know what I tend to find here is that stocks that do a repurchase and they also hike their dividends, they often get sold off. To me, the reason for that is, like in the best case example was when Microsoft did that, I think $60 billion buyback or something like that. The stock just kept cratering weeks and weeks and weeks. It just kept going lower. Okay, the reason why I think buybacks looks pretty bullish to the investor, but the reason why I think it's bearish, and we often see that that situation is because when companies do repurchases, it tells investors that they do not know how to innovate their service or product, so they'll rather just buy the shares. Okay, that's one way to look at it. Of course, everyone has their own opinions about it, but what we see is a reaction is always negative. Okay, so this here bounced off our estimated weekly low multiple times, but did break down and went slightly lower, but pretty much closed at our estimated weekly high, because that's where the gamma is, just 1 point off there. So interesting to kind of see that as well. I don't recall seeing any news on Eli Lilly, but the full analysis was there. UPST, so I was loaded on calls on this stock here. Wish I held a little bit longer, but basically I didn't find the best entry point because I rushed the play. I bought the option contract in the neutral range, which is not something I'd like to personally do, because whenever in the neutral range, I often like to wait for the entry to come to me and me not force it, but I forced it, and eventually the reason why we got it in the first place is because it held our level 1 bearish, and then I bought it in the center over here. Our calls pretty much lost value on this chop, but then eventually on that random Thursday, this thing just ripped all the way to my level 2. That's when we knew that the trend was confirmed. I sold it there because I had a very large position on there, and then made a big amount of coin. Eventually start to drop a little bit, but remember, level 2 bullish confirms the trend. Okay, level 2 bullish 85, so it always tries to come back no matter what. And then it bounced, boom, hit our level 3, off by 80 cents from the exact top, but you know, pretty much we call this on the money here. Okay, so perfect analysis here. You know, UPSD is going to be moving off the CPI report because of you know, when there's anticipation that rates are going to be going lower, that's when the stock can really rally, and that's a good thing for it, right? Another thing is FOMC interest rate announcement. If they do cut rates, that will rip the stock. So this here can potentially see $100 next week. Okay, so just be aware of that. Apple. So we were off on this stock here. This one here really ripped above our estimated weekly high to 250. So that was off around 3 points or so. But pretty much didn't trade this at all. Apple did look very strong at first. So it's surprising to see. This is the first time where I was actually not right about Apple. Usually I am, right? But just interesting to see that. Okay, so Carvana here called out level 2 bearish, bounced off our level 1 temporarily, level 1 bearish, and then just when it rocked, you know, got stuck in our chop range, as you guys can see there. This here didn't have a great move, even considering on the CPI report, right? So, but you could have played calls either way on the up or the down. But pretty much when this level 2 bearish hits, you have to make sure that you do not hold it too long. And it pretty much hit a higher low, and that's when it started to really dump here as well. Netflix, we just call a scalp on this, pretty much at our inflection point earlier today. It hit a level 2 bearish, confirmed the downside trend. You know, pretty much stuck there. Broke out here when all the tech start to explode on that CPI report. They all moved, and then this just pretty much bounced off that 909, and just trading in range here overall. Okay, so just trading between my inflection points, nothing over here. But you know, as you guys can see, you can buy calls, puts, whatever at these specific numbers, and even GS, right? So GS hit our level 2 bearish, broke below level, you know, bounced off the level 1, bam, back down to level 2, and then pretty much just trading range. You guys can see that right over here. Sorry, right over here. The numbers are pinpointed. Didn't trade GS, but knowing these numbers, because when we have these numbers, we can do many things with it. I use it as like a benchmark sometimes. When I look at, okay, GS is hitting level 2 bearish, does that mean banks are strong, banks are weak, whatever the case is, okay? Now, CrowdStrike, one stock I am really mad that I didn't play, because I was really considering buying calls on my estimated weekly low. You guys can see that right over here at 345, and then boom, that was the exact bottom, and this stock just ripped right off that number there. Okay, so interesting to see that happen in real time, that we called a bottom right off the penny on that stock, no edits whatsoever, done in real time. Okay, so that's pretty much all the stocks that I have analyzed. There's a lot of things to cover, but I teach my members in my room how to replicate this. We have an alert system here where every time we get a stock that hits, we can see that alert, so we were able to watch multiple different stocks. I'm also watching the premiums as the stock is moving. So if you guys want to get access to this information, these trades and alerts, you know, we've been fairly consistent. As you guys can see, we're accurately calling the tops and the bottoms on UPST, CrowdStrike, you know, close to Tesla, S&P 500, QQQ levels are perfect. All these levels are hitting spot on. And, you know, two weeks ago, we even shared it publicly, everything that we were analyzing. And we often do around 20 to 25 stocks that we're looking at, right? So if you guys want this information to help you with your trading, it can definitely help you, because like I said, when those level 2 hits, you know the trend's confirmed. It allows you to understand that you need to focus on the upside, downside. You can buy scalps. You can pretty much play the bullish breakout zones. So there's many things you can do, and it's very helpful to do it. And besides all that, we've been dropping a lot of free trade bangers for the team here, and a lot of people in our free Discord are making money as well. If you guys want to take a trial for FOMC, which is happening next week, There's a link here. It's only going to be there available for a temporary time. Check it out if you want a 3-day trial, and we'll definitely be happy to give it to you. So thanks for tuning in. We'll see you guys in the next one. And like always, let's get that money.